This is going to be a video about the latest Object Trader version that is out there. The date that I'm doing this video is June 22nd, 2024. This particular script was put out on June 20th, 2024. Now, this script has actually just simply updated a few things in Object Trader, but one very important update has been the Apex rules. So we basically even named the file OT Viper Pro Maximizer and then -Apex rules. The reason for that is because a lot of people nowadays use these prop firms. And what I mean by prop firms, if anybody's new and basically has not done this in the past, prop firms actually charge you an evaluation fee to basically show your metal, show that you can trade. So there's not a lot of rules on the valuation as a rule, but when you actually get qualified, you'll find that you get what's called a performance account. Now these performance accounts do have some rules in them. And some of these vendors are actually pretty stickler on their rules and some are a little bit more lax. But if you break a rule, you won't get paid. So it just really boils down to you don't want to break those rules. So what we've done in this particular version, we just updated this version to have Apex rules. We have added DCA rules, which is actually your dollar cost averaging. Okay, and this will keep you from breaking this particular rule. And I'm going to go over exactly what that rule is. And this really applies to PAs, not evaluation accounts, but it's not a bad rule, truthfully, because it keeps you from just really jumping into a contract, adding more and more as a position goes against you. They call that dollar cost averaging. And the opposite of that is scaling in, and that's fine. When you're profitable, you can keep adding as many contracts as you want to try to get even more money. But when you're going against yourself, you don't want to keep adding. So this dollar cost averaging rule has now been built into Object Trader. Okay, so let me show you just real quick on that. If we go to a chart, I went ahead and put Object Trader on this chart. You'll notice here where my cursor's at that there's a new checkbox called Apex. Now, the reason we just call that Apex is because, frankly, a lot of traders are on Apex trading, and they've got literally hundreds of thousands of evaluations out there. They pay millions of dollars out in PAs according to their website. So basically, we've got a lot of traders doing this, even though they might trade their live accounts also. So Apex has some rules, and these are really important. I'm going to go to Apex. If you go to Apex's website, it's just atf.com, and go to the help menu, you can type in PA consistency, and it'll pull up the PA consistency rules. Now, these rules, like I say, are very, very important because there are things you can do and things you cannot do. Dollar cost averaging, okay, this is right here in their help under PA consistency. Dollar cost averaging for any contract is defined as the practice of entering with a trade with a directional bias or no bias at all, just entering to gamble. And the market goes against you in the other direction. But you continue to add more and more orders multiple times in the direction of the original order, even while market continues to go the opposing way. This is the opposite of the example above, which is scaling in. Scaling into winning trades and adding more when you were right versus adding in more and more when you were wrong in hopes of a turnaround and to make up some losses from the initial entry being in the wrong direction are two very different scenarios. The use of dollar cost averaging with multiple additional entries is prohibited and in breach of the Apex PA account and can result in forfeit and closure of your account. Now, this is very serious because if you, for instance, jump into a trade and it goes against you 10 ticks and you add a contract, they're okay with that, but you can't keep adding to it. They will only let you add one time. You can add as many contracts as you want, but they only allow you to go one time. Now, otherwise you would be dollar cost averaging. So we actually put it into the script where you cannot dollar cost average if you click that Apex switch, the little checkbox. Okay, so basically this is a big no-no on Apex. You clearly see you can even lose your account. So we take that very seriously because personally, Linda and I have many PAs, and we don't want to break that rule ever because evidently, since they're putting this out on their website, they're serious about it. Okay. There's also another rule that we built into Object Trader, and that one is called hedging. Let me see if I can find hedging. And by the way, keep reading all about this, for instance, about dollar cost averaging, okay? Because like I said, they will allow you to go, uh, let's say you go into a contract and then it goes against you, so you add one. Uh, well, you can't just keep doing that. So read that rule, okay? And there's even permitted examples of dollar cost averaging, okay? So here's another one down here. Let me see if I can find the hedging part. We also have a spreadsheet for this rule. I'll go over that in just a few minutes. But let's see here. Where's hedging? Should be down here somewhere. No, I don't see hedging. We'll go back into that. Anyway, hedging is actually where you go the opposite direction on a correlated instrument. So let's say that you're trading YM long and you saw an opportunity to go short on ES. Well, you better not do that with Apex PA because you'll lose your account. That's called hedging, and they don't allow it. So we also wrote that into Object Trader too. So that, for instance, if you're on an account, let's say you've got Apex PA 1-01, and you decide to go with, long on YM and short on ES, Object Trader will stop you and it'll cancel the order you're trying to place. So this can be very, very good because basically, if you want to make money on these prop companies out here, and some of them literally, like I say, have paid out millions upon millions of dollars, and they do pay because I've got PA accounts and I get paid on mine. But the whole thing is you want to make sure that you don't break the rules. Okay. So I highly recommend anybody that's with us, if you're with any kind of a prop firm, be sure to look up their consistency rules or anything to do with a funded account. Okay, we're going to try to mitigate these type of things with Object Trader, but it is ultimately up to you to make sure you don't break their rules. Apex will tell you up front, they don't want gamblers, lucky traders, windfall traders, scammers, erratic traders. They don't want you to work the system. Basically, in other words, they want traders that can trade and make money. Okay. They want traders with set, disciplined, and consistent rules, which we have at Viper Trading Systems. We take mid-band trades first time after trend change. We take phantom trades first time after trend change. And we take these break trades when they change trends. And you do want to make sure that you have initial stops. We do have those. And obviously, just keep up with the rules. Okay. So let me show you the example of this though. Okay. What I'm going to do is I'm going to go ahead and just fire a trade basically short if a bar closes down. Okay. So I'm going to go ahead and just turn on Object Trader for a bar close down short, and we'll do it on even up to the max contracts. And if this bar, see that closed down, now you'll notice that my P&L is now positive. So I can add to this trade if I want to. See how it's positive? But if this goes negative against me, I can only add one time. Okay, so let's just go ahead and we'll do like a box, for instance, like a region close, and see there's a little trade right there. Okay, and you're in the money. Okay, you're in the money quite nicely. You could always go ahead and take, one off or something because you're up like $200. Take some coin off the table. Maybe go again if it goes your way. We've got it turned on. Okay, but see now it's negative. So if I add one, I'm okay to do that. But if I try to add another one, it breaks this rule. See where it says current unrealized P&L on ES 924, which is the contract, 4-range bar is negative $37.50 at the time I tried to fire that trade. Now, if I click OK and I want to fire it again, I can, because see, I'm not negative anymore. So that is our dollar cost averaging rule right there. You basically, if you turn this on, it will only let you go one time more in the direction of a trade that is against the P&L. So if you try it a second time, it will kick that little box up that tells you it canceled the order. Okay, so let's say, for instance, I forgot to take my coin and now I'm down 87.50. Oh my goodness, what if I wanted to add 6 contracts? I can't do that because it's breaking the dollar cost averaging rule. Now, if I want to go ahead and add those 6 contracts, what I can simply do, see where this is positive right here, where my entry is? I can actually go ahead and put like a region here, all right? And that's where I would be profitable again, okay? So I could just simply say, you know what? If you break that again, I'll go ahead and add 2 more, okay? I can do it that way, but I can't do it where I'm against the trade. Now, keep in mind, we would be out of a trade like this, but I'm trying to show you something. But anyway, see, it's negative, so I can't add, okay? So I'm just stuck where I can't add without actually being in the positive again, okay? Now, maybe you don't want to do 6 or something like that anyway, obviously. You know, you could even wait. For instance, let's just do this for like a phantom instead. You know, we've got object type. It looks like it's going to do a phantom, doesn't it? So let's do a phantom instead. And you'll notice though, that if it does a phantom even, I can't fire that trade because this particular trade would still be negative, okay? Now notice we've got like 4 contracts on, so you're going negative quite a bit right now. But watch this, if it does do a phantom, I'll go ahead and put the stop out of the way. All right, and if this bar rolls over, this will not give us a phantom. See, you haven't got your phantom background yet, you haven't touched line 6 yet. But if it does even, this will not fire that trade because of that dollar cost averaging rule. Now, if you were to do this and you were down like this, see, I'm going totally against the direction of this right now. See how I'm negative? And this is telling me you can't do this. Dollar cost averaging rule exception has been used, that new order's canceled. So if I just keep trying to turn this on and everything, I can't trade because it's not in the profit yet, okay? Now, if it does go in the profit, let's just go ahead and turn on region again, then we would be able to. But watch this on bar close. See, it kicks it out again, okay? So it's letting me know that my dollar cost average is kicking in. So I might as well just say, hey, I can't do this anymore. So I'm going to have to do a region, bring it down here like this. If it breaks, I could go ahead and add, okay? And I'm not saying this would be the way to trade this. I'm trying to show you dollar cost averaging. So now you'll notice that I've only got on a region, nothing else is turned on. So if it breaks that region, I could go ahead and add these contracts. Okay, this would not be dollar cost averaging if I go into the profit. Okay, so that's going to be the example of dollar cost averaging. It's really kind of cool in a way because if you think about it, you know, I just went multiple contracts while that thing was going against me. Notice that was down like $600–700. Okay, so they're trying to stop you from doing that. That's the opposite of scaling in. Now let me show you what scaling in is, so you'll see that you're not breaking a rule. If this breaks this little box, I can keep adding and adding and adding. You know, for instance, if I wanted like 8 contracts and maybe put on, I don't know, like the little break. Let's do it where it's down here. I could add to that by just simply turning auto max on, go up to my max contracts, and I could do that. But scaling in is different than dollar cost averaging. See, we're negative still, so you can't just add to this. And a lot of people have done this on their evaluations and they pass them because, you know, frankly, it does work lots of times. But when it doesn't work, you're practically killing your account, and that's what Apex does not want. They don't want you to blow a PA, you know, when you are definitely wrong. See, now we're in the profit again. I could add, okay? I can add to my heart's content. See, there's, let's just go ahead and for the fun of it. See, there's 8 and there's 10. I could even turn it back on if I wanted to add more, and see how quickly your P&L, when you're scaling in, can go your direction, okay? But you want to take some off, obviously, and you could even scale in again and again if you wanted to. You know, just turn on your little box. We're in 8, we could get in some more if we wanted to. Now we're negative. Notice dollar cost averaging will kick in again. You can't do it, so we got to go a little bit lower. See there? Dollar cost averaging stopped it. Then it went in when it went positive. So this is going to be a little pop-up box that'll stop you from doing anything. So you want to click the OK button and let it know that you realize that you're breaking a rule if you keep trying to trade this. And that's why we built this in. Okay. Now, let me go over another thing that we've done here. Bear with me a second. I'm going to pause the video for just a moment. Okay. Another thing that you cannot do with Apex on a PA account, you can't trade a correlated account going the other way. So in other words, let's say that I'm short on ES, okay, and then I wanted to do a YM chart, but hey, YM's heading up. So you're going to have to make up your mind. You have to choose one of those charts. You can't do what's called hedging. Hedging means that you're trading ES long, YM short. YM short, ES long, Russell long, YM short, anything like that, any correlated instruments. And so we built into Object Trader these tables that will keep you from doing that. So you don't have to worry about which instruments are correlated. Object Trader will make sure that you don't do it because it's called hedging, and it'll pop up a little window that even says hedging. Okay, so these are new things that we've added to Object Trader lately. And I'm going to show you one other thing that we've done. Bear with me just a second. I'll be right back. Okay, Apex has another rule on here, and we couldn't build this into Object Trader simply because there's just too many variables involved with it, because we do cloning, different accounts at one time, you know, different charts and everything else. So the consistency rule, you're going to have to keep up with yourself. So what we've done is we built a spreadsheet for you. Now, let me go over what the consistency rule is. Consistency rule simply means that Apex is not looking for gamblers or windfall traders, but keep in mind that you can have a good day and not be a windfall trader or a gambler, but you have to then prove to them that you can be consistent. So if you have like a big day and you've just started like on your new PA, and let's say that in our room we had just a great day and you made like $3,500, okay? Then you're gonna have to make quite a bit before you get a paycheck, because Apex considers that $3,500 as a major high trading day, and you have to make sure that you cover that by the time you get paid. Let me show you what I'm talking about. We built a spreadsheet, and you get it. You'll get that. So what you do is you actually, let's just say that yesterday was the 20th. So what you want to do is you want to put your start date up here, like the 20th. See where I'm changing that? And let's put this to like July 15th, okay? So now that's my date range, okay? And then this is going to tell me what I need. So let's say I told you $3,500. Now that's telling me that by paycheck time, I need to have $11,666.67 in that account, or they're not going to pay me, okay, because that's a big day. So let's say the next day we had a little bit slower day and you made $500, okay? Notice that that's going down a little bit, but you still got a long ways to go, okay? It's telling you that you basically got days and days to go. So let's go 1,500 on that day. See how that keeps dropping? Now, what you're going to do is you're going to basically log for each and every account that you have with Apex, okay, or any other, you know, Top Step Trader has a consistency rule too. Theirs is 50%, but they still have a rule, okay? So basically, they require you also to trade 10 days. So you're going to want to just keep up with this. And let's say we do 1,200 that day. And let's say we have a nice day here and we do $2,000. Okay, we're getting a little bit closer, but we still can't get paid yet. Plus, we haven't traded 10 days. Okay, so what you have to do is you have to make sure that before you request a paycheck, that you've qualified for the 10 days, you've not broken the rules, and you're consistent. So basically, you just keep trading day in and day out with Viper Trading Systems. Let's say you just keep going and you're finally getting closer. You're getting close to that payday and you're not there just yet. Say you make 1,000 that day and you're at 30.7%. You've traded 1, 2, 3, 4, 5, 6, 7, 8, 9 days. You got to trade one more day. That one more day gets you that paycheck. So let's say this day that we have a good day in ES, oil, and gold, and you made $2,500. You're now under the percentage. You've traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. You've qualified. You haven't broken DCA rules. You haven't broken the hedging rule. You haven't broken the 30% rule because you have to be consistent. So your total range is $13,900. The required range was $11,666. But what if on that 10th day that you had the best day you've ever had? This day was your best day, $3,500. But what if you did $5,000 this day? You're back out of consistency. So you'd have to trade one more day. See how that works? So you've always got to stay consistent with them. Now notice that's really close, so they would probably pay you anyway. But let's say they didn't and you decided to trade one more day and you made $500 and you're back in business. And this log will keep up with that. So now you get a paycheck, all right? And then you simply start your date over. So let's say it's now, I don't know, the first of the month on July. So you change this to July 1st. You start your end date. You start doing your range one more time. So what I'm getting at on these videos is it's really very, very, very important that we all get paid by these people because, you know, there have been millions of dollars paid in evaluations, resets, special sales, and all that kind of stuff. But you want to be one of those lucky few, or actually not lucky few, but very well trained few that can go in there and make sure you make money every day, you don't break the rules, and you continually get the paychecks. Okay, so that's what I've done here at Viper Trading Systems. I'm giving you a spreadsheet that'll keep you consistent. I'm giving you rules. Just go to Apex Rules, you know, just simply go to their help menu and you can type in PA consistency. You can read the same rules I just read. But in Object Trader, we've given you the ability to click a little button here, and this will keep you from breaking the rules that'll cost you that account. Okay, so Object Trader is probably one of the finest tools out there because Object Trader has the ability to do every kind of trade you can imagine. And of course, on our website, we've got all of the tools and everything. You just simply go to Viper Trading, go to your members area, and just watch the videos. This video will be posted. It'll be under Object Trader Tutorials, and it'll be under New Apex Rules. Thanks for watching.